Good morning. This is my trade recap from September 18th, Thursday, and I'm adding audio after the fact. So I will try to keep up because some of it's fast forwarded, and I tried to edit it and keep it real short. Looks like right now I'm marking a block on hourly, and the top of that block, which I will watch for support next time or each time price returns to it. And I think I had work meetings that day, which is why I didn't get on the charts until about 11 o'clock, it looks like. You can see I've already set some limit buys down there around points of interest. One of those, the white area being the first presented fair value gap. Let's see. 18th. Okay, so price is about to put in a new short-term high. And here in a minute, I mark out the order block that's sitting at the bottom of that higher high. Excuse me. There it is. Put my order in. And I'm cheating here because I pulled up TradingView on my other screen, and I can see all the executions and some of the drawings that are still on my chart from Thursday. So I should be able to keep up. Price is about to drop down into this order block and miss my entry by maybe 2 ticks, I think, if I had to guess. And it says, just kidding. That one's kind of a bummer. I was probably messing around on Discord or the internet or work. Because if I had seen that wick happen, I would have went ahead and entered with a market buy, and then just tried to grab the quick profit at the previous high, or $55, whichever was closer. to drop down and create a new bearish fair value gap. I'll mark it here in a second. Or maybe it's later. Maybe I mark it much later. We start to get a little movement right here. Oh, and this was my first trade of the day, and I didn't realize I still had 3 contracts on as the default from the previous night when I think I was trying to close out or manage out of a trade. So I accidentally got in with 3 contracts instead of 1, and I think I closed that break even. Yeah. That's me reminding myself to point that out, that we missed that entry. That is what I'm expecting price to do, which it does. It just takes like 3 bars, 3 candles to get across that yellow line. Here I'm going short based on the idea that price has just made it below the midpoint of that order block, and the midpoint will now become resistance. I like that first wick. And if I wasn't a little more gutsy, if I was a little more gutsy, I would have held. But at this point in the price action, I would totally expect it to do one of those 2 things. I'm not sure what just happened there, but we lost our video. So there's a new block, very small, but I'll count it, especially because it is right on top of that yellow line, which I'm hoping becomes resistance. Which it does, but I didn't trade short. I'm not sure what I was doing, but I should have taken that as a short. Price dips down here, but not low enough to get a fill. And those orders sit there like all the way through lunch, I think, and never get touched again. And this part should be fast forwarding. I don't know why it isn't. Maybe I messed up in my editing, but If you want, you can fast forward until you see price return back up to the next purple fair value gap you see me draw. So that new trade I just put on is kind of very low probability trade, but sometimes you get a real deep wick back to some of those important levels or PD arrays, and I thought it was worth a try to pick one up real quick. The idea was it would drop back down to that 1 hour level and then come back up and clear out the relative equal highs, but it didn't, so we keep moving. Price has now, it's kind of covered up by the, there you go. Price has now come back across the midpoint of that block, so I like it for a short long. Here I'm drawing out a fib, looking for retracement, just to see how deep it has retraced on that current range. 618, pretty popular reversal point. I don't think we get that here. I think it just keeps kind of grinding up a little higher. Yeah. Now I'm short on this position based on the it's the three small candles, up close candles, that I'm treating as a block. Not normally something I'd do, but it looked uniform enough. Like my eyes just wanted to treat it as one candle. The way it's right in the middle of the two, I don't know what to call them, the downward closed candles. think the video fast forwards quite a bit here because it just slugged along sideways, kind of creeping up. But you might see, or I might have already done it. Oh, yeah, here's me pointing out just repeating patterns. I forget what that's called, but everybody calls it something different. But something I notice here in a minute is that the candle height they're just getting super small, like two handles tall, and that's not great. I mean, it can be great, I guess, if you want to trade in Q without the NQ anxiety. I'm not sure if those count, but I was marking those based on a concept I've heard some of the traders in our group talk about, and ICT low resistance LR, I think it is. Anyways, the idea is it puts in higher lows, very methodical higher lows, or lower highs, and then price eventually sweeps back through all of it and clears it out, so to speak. I think that does end up happening here, but I don't think it would be considered LR. Here in a minute, price action starts putting some wicks into that bearish fair value gap, the purple area. And after I see a few of those wicks, I start trading short. And I think I get a break even on my first try. And then I see a pretty decent wick back up into the fair value gap, and I go short again. If you want, you can fast forward, I don't know, maybe 10-15 seconds until you see like 4 consecutive wicks. And then you'll see my first short entry show up. I bet I dragged this fair value gap over. probably after I take the entry. Like, I see it happening and I don't have enough. I focus on the, oh, no, yeah. I do the entry and then drag it over. And being a greedy SOB right there, look at that $290. Because I think, oh yeah, it's going to go down this fair value gap that hasn't been touched yet. So I draw it out. Also got that nice level. Like, that's as far as I would trust my trade, because it could do that. Oh yeah, got magic lines in there. That's the 200 simple moving average, about to meet up with price at the fair value gap. But as we will see, it doesn't matter. Price goes right through it. The moving average. Yeah. Couple of opportunities to close at $120, $130. Didn't do it. And then this wick coming up. Oh, do I close it? I don't remember what I did. Either closed it or the wick closed it for me, because I think I moved the stop down already. Like, it's $10. Look at me, still not closing it, but I'm ready. It moved right as I took my hand off the cursor, or took my cursor off the close. Yep, good reminder. Dum. Then I see that wick and I'm like, okay, let's go. Yep. I leave these notes behind for me, if I remember, just in case I'm not able to, like when I don't have the microphone live. That way when I'm rewatching the video and adding the commentary, it's kind of like a reminder for myself. And who doesn't love emojis? Or icons, whatever. I think we're about to get filled. There it is. And that might be the best trade of the day. What are we looking at? Yeah, 375. 895 for the day. I don't know if I'm going to do the stop sign icon or not. But that's it. End of the video. And catch you later.